So what's driving the markets today? The S&P and the Nasdaq both hit all-time highs. So on a day when it would have been very reasonable for the market to be lower, given the fact we have no deal with Iran, and some of the data was a little concerning. We'll talk about that. But the Dow was up 790 points, 1.62%. The S&P up over 1%, and the Nasdaq almost 0.9%. So that means the market is up about 5% year to date, in spite of we're not going to get any rate cuts from the Fed, in spite of the fact we've got war, in spite of the fact we got $100 oil. The markets are still up. The markets wanted to be higher, clearly. So there's a lot of people betting on America, no doubt about it. So we had some major earnings announcements. Amazon, Alphabet, Apple all beat on their earnings. Meta and Microsoft, for different reasons, disappointed. And so we'll see some of those stocks moving higher and pretty strongly, and some took it on the chin. Meta and Microsoft had a tough day. I think this pullback could be an opportunity in Meta, by the way. And I felt like Microsoft's been a deal since it was at 350. It made a move higher. If we get a few more days of Microsoft moving lower, that might become really attractive. I'll keep you posted on that. PCE. So this is the Fed's preferred metrics when it comes to measuring inflation. So it stands for personal consumption expenditure. The core PCE, which means you take out energy and food, came in at 3.2% as expected. But we're a long way away from the Fed's target of 2%, which means they're not going to be in a position to cut interest rates to help the market. The market is going to have to be driven by earnings. And so far, so good on that front. GDP came in at 2% for the first quarter. We are expecting 2.2%. So that's a bit of a miss, but 2% is still really solid on an annual number. Oil prices fell to $104.31 a barrel. Keep in mind, 2 months ago, a barrel of oil was in the low 60s. We got a long way to go. And before we get there, we're going to have a deal with Iran. 10-year Treasury.